Hello and welcome to a new episode of the Metal Movers podcast. I'm Ellie Saklatvala, Global Editor of the Argus Metals International publication, and I'm joined today by Associate Editor Tom Kavanagh and Senior Analyst Will Talbot to discuss the trends shaping the world of battery chemistries. This is clearly a topic that's attracting growing interest from all those involved in batteries and battery metals. And of course, we're sitting down ahead of this month's launch of a group of new Argus price assessments specifically for cathode active materials. So Tom and Will, welcome to the podcast. I will kick off with you, Tom, if that's all right. Maybe to start with, you could give us a rundown of how you're weighing up the various battery technologies out there. There's a lot of competition. Every week there seems to be a new technology in the mix. Is there a place for all of them within manufacturing, or could some fall by the wayside?
So I think with the battery chemistries in particular, I think what we're seeing is increased dominance of, as the years go on, the higher nickel cathode materials on one side, and then the LFP, lithium iron phosphate cathode chemistries on the other side. And I think Will can explain this as well a little bit further, but over the past couple of years, we've seen a trend towards higher nickel cathode materials so that we can replace the cobalt, which was seen as a high risk material, and then others, especially in China, switching towards LFP batteries because they thought that it would be lower cost. Unfortunately, this over the last year hasn't actually shaked out that way. Because of various pricing trends that we'll get into in a minute, but I think that's the main large macro trend that you see in the market.
Will, do you want to chime in there? What are your main thoughts and observations on this increasingly competitive landscape?
Yeah, sure. So I guess obviously the most prominent story in recent years has been the huge rise of LFP versus NMC chemistries. And we're now at a stage in Chinese battery output where LFP is overtaking NMC chemistries. LFP clearly offers advantages on a price front compared with NMC, and also isn't exposed to changes in nickel and cobalt prices like NMC chemistries are. But it still has slightly lower performance than some of the higher nickel NMC chemistries that we see. I think even as the various battery markets transition towards higher shares of LFP, NMC is still going to remain there. We are going to move towards higher nickel cathodes, but NMC will still be there definitely in the next 10 years.
I'd like to pick up on that point about the higher nickel content. Obviously, that's been one of the major topics really in the first half of this year. Huge price volatility, and then of course concerns about availability, particularly of Class 1. We'll just stick with you for now. How do you see all of that volatility, the concerns about supply, the concerns about availability of those Class 1s? How relevant is that? What impact is that having on the cathode space?
That volatility that you mentioned is impacting prices at some level, but because you still have entire supply chains built around producing NMC batteries, this isn't something that's just going to change overnight just because of some volatility in one of the metals that goes into it. And obviously, in some ways, the ways that the contract structures can protect against that, depending on which companies are doing that. I don't think that the volatility that we see in nickel means that battery producers and car makers are going to flock away from NMC. And I think particularly in the longer term, now that we're starting to see more MHP sites, now that we're starting to see more dedicated nickel sulfate sites coming online, that will perhaps try to mitigate some of those changes that we've seen in the past couple of months.
And how many years off do you think we are from seeing some of these MHP projects, nickel sulfate, seeing all of that stuff really hit some scale and impact trade flows?
I mean, I think it's going to happen a bit, sooner than some people think. I think again, I haven't got the figures to hand, but I think we're going to start seeing more MHP sites maybe next year, the year after. I think, Tom, you can comment on some of the proposed timelines for that. I think, and to an extent, this I think will be evident in pricing as time goes on, because at the moment the nickel sulfate price effectively trades at on a nickel basis trades at a premium to the LME, and I think we're just going to get to a point eventually where we have a separation between the two. We have nickel sulfate prices being driven mainly by the battery sector, whereas the LME remains linked to, for example, stainless steel, NPI.
Tom, do you want to share any particular thoughts on that? There's, of course, also the cobalt element, which has maybe been hitting the mainstream headlines slightly less than nickel, but it is nonetheless a huge story. You're on those markets day in, day out. Could you share some thoughts on how you're seeing volatility in the cobalt market, and whether there is much real weight to this narrative about cobalt-free batteries going forward?
I think with the shift away from cobalt by manufacturers previously was motivated by the concern over the Congo being the largest source of cobalt, and the Congo still is responsible for around 74% of mined cobalt supply in the world. But the practices at the mines in the Congo have come on quite a lot since those original concerns and the concerns at, say, the Cobalt Institute conference in 2017, 2018, when people were really focused on shifting away from cobalt towards more high nickel content batteries. I mean, obviously the high nickel content batteries, they not only move away from cobalt for the reason of ESG and that kind of thing, but they're also looking for higher power in the battery itself. So there's another motivating factor in there. But when with cobalt, those concerns about child workers, terrible conditions in mines, they are being addressed by some of the larger companies in the Congo. So you can see with companies signing long-term agreements with the likes of Glencore and others that they're more open to using cobalt from the Congo. So I think that motivating factor to move away from cobalt in batteries is falling away, but the motivation to achieve higher power output is still there. So higher nickel content batteries are still going to be the favored choice for high-tech car manufacturers.
Do you think that end users, particularly outside China, if we look at Europe, the US, Canada even, do end users need to be more concerned about future availability of cobalt? We've seen a succession of major supply contracts being signed. We've just had Renault have just signed a fresh deal for sustainable cobalt sulfate. And of course, we have the aerospace industry, which is finally starting to ramp back up and come back into the metal markets. How serious do you think the issue of availability is going to be in the coming years?
I think on cobalt, I think who's going to be stung by the difficulty in getting cobalt is twofold. You've obviously got your traditional users of cobalt, so the alloy producers and for oil and gas, medical, and aerospace appliances, and I think they're going to find it difficult to find the metal that was once available, and then you've got several sulfate projects coming online over the next few years. And thinking about people like Electra in North America and Project Blue in Australia that have quite high levels of output, decent enough to sort of supply quite a big chunk of their respective battery markets. And then the rest of that sulfate is coming in China, and now with Indonesia as well ramping up, then some of these HPAL MHP projects could provide decent cobalt capacity in the form of sulfate as well. Looking at some of the projects in Indonesia, you've got PT, I think it's Huafel Nickel Cobalt, which is 15,000 tons of cobalt capacity designed into it. Huawei 3,000. There's a lot of projects that promise good numbers on cobalt sulfate. The problem is whether they are able to deliver them, and if them Project Blue, Electra aren't able to deliver what they say they're going to deliver, then there could be a problem. But yeah, I think sulfate will be is an area of focus for investors at the moment.
Yeah, I think there's a huge amount of debate, particularly outside China, about mining capacity and those raw materials, but it's really it's the chemicals and the sulfates where I think not a huge amount of attention has been put so far, and that potentially will need to change. Will, we'll come back to you. We've touched on nickel, cobalt. I think lithium's the big elephant in the room, and of course you mentioned earlier this big trend in recent years towards LFP, a huge growth area. I wonder if you could dig into that a bit further for us. I mean, for starters, do you think a large-scale switch to LFP would really save on battery costs, especially if we think of how high lithium prices have been in the past year or so?
Well, I mean, when you say would it cause a decrease in lithium costs, I mean, I'm not entirely convinced by that because, you know, LFP batteries still use lithium. The cost per kilowatt hour is, I believe, slightly lower than for NMC batteries, but then LFP also has a slightly lower power output compared with NCM. So I think, you know, in a way, it would just be switching from one form of lithium to another. So no, I don't think that a full-scale switch to 100% LFP production would impact pricing. And also, it's just not going to happen. I mean, you've got, for example, you know, GM and Ultium who've already committed to these NMCE batteries in the States. Yes, China is or has been quite committed to a transition towards LFP, but they're not at 100% yet, and they probably won't be. So I think, you know, the idea that LFP is kind of a silver bullet to drive down lithium prices is quite simplistic in the arguments that are presented for that. I mean, obviously, lithium prices have been you know, incredibly high recently. I think they increased something like 400% in the past 2 years. But that's not because of you know, that's not because of any kind of changes to demand. I mean, what we really need is more investment at a mine level and more capacity, because there is enough lithium in the ground to meet demand. We just need more mines extracting it.
Chime in on the lithium question that, you know, there's much of the market is expecting a price correction after the soaring highs that we've seen over the last year. I don't think that lithium at these prices is sustainable because of the amount of investment that at these prices it makes viable. So, you know, these supply chains tend to ramp up in phases, and this is a high price phase for the market. But 2023 onwards, you're looking at a lot more supply coming online in South America, Australia especially. So you'll definitely see that price come down, and that could make LFP attractive to certain sections of the market again. So yeah, I think that we'll definitely see the market focused on that material when lithium starts to come down.
I'll finish just with a general question about pricing, the key costs going into all these cathodes. Tom, you say that you think the lithium market will ultimately ease up a bit, prices will come down. If we look across the non-ferrous metal world, prices for numerous products are at structurally higher levels. We have been seeing a bit of downward correction in the past month across many of them. And I think one of the big questions that people don't really have an answer to right now is how deep those corrections will be, whether we can return to, say, pre-pandemic levels. We've had cobalt hovering just below 40 in Europe, which is unusually high for that. Lithium would need to come down quite some way in order to return to pre-pandemic. Could we finish with just some thoughts from both of you on that whole landscape? Do you think we're in a structurally higher environment even post those downward corrections, or could we return to some of the economic norms that we had maybe 2 or 3 years ago?
Yeah, I think for me, pricing of metals is in a different we're in a different era than before the pandemic. We seem to be in an era of difficult logistics, more regional and local supply chains, and that costs money with sort of the push towards localization or deglobalization, as some might want to call it. I don't think we're quite there yet, but we're definitely regionalizing some of these suppliers. I think that comes with a cost, and then on top of that, you've got ESG and carbon concerns, which are inflationary in nature. So, yeah, I think we're in a different paradigm to where we were before.
Yeah, I agree with Tom 100%. I think particularly for lithium, as Tom says, we will see an easing in the coming years as capacity comes online, certainly in the next 2 to 3 years. But we're not going to see a return to those pre-pandemic levels. Fundamentally, demand is so much higher because of EVs, as Tom mentioned. The ESG concerns that drive up, production costs will continue to support prices above, say, 2018, 2019 levels. I don't think there's any going back to that now.
Okay, well, we're fresh out of time, so I'm afraid we need to close up the discussion now. I'm sure we'll be returning to this topic many times as the battery industry evolves. So thank you everyone at home for tuning in. We look forward to welcoming you to the next edition of Metal Movers. And Tom and Will, thank you very much for joining us.